to the Fast Money Halftime Report. We're getting to the heart of the action as it is happening. Down day on Wall Street as the dollar takes control of trading once again. Is this the beginning of the correction everyone seems to be waiting for? Let's get to the word on the street right now. Our Fast Money crew today, the negotiator, Guy Adami, Greg Tricoli of Opalesque, Eugene Profit of Profit Funds, and Jeff Tomasulo of SMB Capital. Guy, how you doing? How do you interpret the move lower today?
I mean, I've been waiting for something like this for a while. So
Debbie Downer, your time has come.
Well, who knows? I mean, we'll see how it reacts tomorrow off this day. I think we probably close on the lows. I'm giving away my final call, but, you know, I think tomorrow's really the key. I don't like what's going on. Frankly, a lot of the data that's out hasn't been great. This foreclosure data today, to me, is catastrophic, frankly. And people want to be euphoric. I don't get it. I think the market moves down from here. Jeff
Tomasulo, you are an active trader, shall we say. So what sorts of opportunities are you spotting in this market as the dollar is catching a bid today?
Well, I mean, I have to agree with Guy. It's finally, you know, kind of selling off a little bit. And we saw some, you know, that market made a new high, but there's no clear kind of direction right now. Every time I feel like I'm getting comfortable with my longs, they're knocking me down. But the one levels I'm going to be looking at right now, if the spiders get below 109, 108.50, then I'm going to be very concerned about being long in this market. And I'll be looking to maybe short some financials and short some of the higher beta stocks.
Right. We've been talking for a long time about this inverse relationship between the dollar and stocks. Yesterday didn't seem to work, but today certainly is working. One obvious thing that could boost the dollar is a rise in interest rates. Bill Gross, we should note, is saying in his newsletter that he does not believe that that will happen for quite some time. Let's pull up his quote, because this is an interesting one that is going around the floor today. Raise interest rates, he says, with 15 million jobless and 25 million part-time workers, all because gold is above 1,100 bucks an ounce. You must be joking or smoking something. We will need another 12 months of 4 to 5% nominal GDP growth before Bernanke and company dare lift their heads out of the 0% foxhole mini bubbles or not. Eugene Profit, if this means that the Fed will keep interest rates low, that means the dollar will probably remain low as well. Does this necessarily mean that this is good for the stock market, or will eventually you begin to think a weak dollar is in fact bad?
I think that essentially that you won't see this rise in interest rates primarily because the administration is starting to come out and say effectively that they want to support the dollar. I don't think a weak dollar policy is going to be long-term good for stocks. I think it's just a reflection of the economy overall.
Guy, you think people are joking or smoking when they're calling for a rise in interest rates?
Man, I've never smoked in my life, frankly, and I'm not calling for a rise in interest rates, and the dollar might be as worthless as Mets season tickets at some point, but in the meantime, as a trader, I think you're in for a 10 to 12% correction to the upside. I don't know what the catalyst is going to be, but it's coming. The trade is too crowded. It's probably the right trade long term, but being short the dollar is going to clip a lot of people. I think subsequently the S&P is going to fall, so yes, I think the dollar can rise. I don't necessarily think it has to be on the back of us raising rates, though.
Okay, obviously Guy is using a webcam, so we have a little bit of breakage, but we'll move on to the next trade here. Chip names under pressure today. Bank of America downgrading the sector, including Intel, saying lean inventories, actually inventories are close to overshooting demand. So we are seeing that take down the NASDAQ as a whole. Greg Tricoli, you're watching the XLK. Does this start a breakdown here?
Yeah, Melissa, last week we featured it. You and I looked at the fact that 22 to 24 on the chart was decent resistance, and that dates back about 11 or 12 months ago. The market just scratched the surface at 22, a little bit above. We're below it today. You know, I think names like Apple and Cisco and IBM are due for a correction here. The only odd component of this index might be if you look at Microsoft. It's 10% of the weighting of the index.
Right.
I think it holds kind of steady, but overall I think we're into resistance, and I think this and the financials are the catalyst for this correction.
Tomasulo, you picking through the semiconductor index, picking up any names today?
Well, yeah, I'm not picking up any names today, but one thing just to keep in mind, I mean, I hear this conversation that we're trying to, you know, this is the top, this is the top. As a fast money trader, let the market tell you if this is going to be the top, and we need to see some volume come in, and we need to break some levels. But going back to the semiconductors, watch when they come down to some key levels like Intel, you know, sitting in, let it consolidate, and then look to see if it can hold above those key levels.
Right. Greg had mentioned Microsoft, and I do want to talk about Microsoft because of Steve Ballmer making some comments at an analyst meeting, those crossing just within the past hour or so. Ballmer saying that Win 7 reception has been fantastic. More importantly, he said that sales are double any operating system in the same time period. Eugene Profit, does this make you optimistic about Microsoft? And specifically, he says Win 7 is going to help Microsoft combat Apple. That's a bold prediction.
Melissa, it makes me excited about the entire technology upgrade cycle. I just don't think it happens, very quickly. Going back to semiconductors, I think that Intel actually will tell you it's an early cycle name. As you start to see increase in production, it might be a little bit early, but with Microsoft bringing a new operating system out, eventually you're going to see demand for that chip.
Right. All right, let's move on. Take your position because we do want to talk about Dell. That will be in focus in the after-hours session today. Reporting earnings, stock trading to the downside right now ahead of that report. Is this a buying opportunity going into earnings? Guy, what is your position on Dell right now?
We had total stack on last night. I mean, Dell has basically underperformed since the Perot Systems acquisition. I think it's all about margins for them. I'm not breaking any news here. I think 18.2 is a number on the gross margin side. Got to come in around 18.3, 18.4 to get excited about the stock. If you want to play in that space, I'd still rather own Hewlett Packard. Speak to you.
All right, Greg Tricoli, why don't you take it from here? We're having a little bit of problem with Guy's webcam. You sound a little bit like I don't know, like a robot or something, Guy. No offense, I love you, baby, but your audio is kind of not that good. Tricoli, what do you see in the charts for a name like Dell?
Well, again, I think Dell is kind of overbought here, Melissa. I think it could probably come off maybe 8 to 10 points, 12 points in this area here. But I do have to make a comment. I bought Vista operating system 2 years ago. Do I get a credit on that? Did me no good.
Well, the question is, would you be a buyer of Microsoft given Win 7 is that much superior to Vista?
It'll be a lag. I have no problem holding Microsoft here. I think your downside is very limited, 27, 28. I think it's a very conservative stock to hold in here with little downside. Just the upside may be limited about 34, 35. But there's going to be a lag. Let's see the sales come in. Let's see the actual numbers.
All right, let's talk about another stock that is reporting after the bell today, and that is retailer The Gap. It is off by more than 2% ahead of that release. Guy, I'm gonna give it a try once again, see how your audio is. But you are a Gap follower. You've been bullish on Gap. Would you buy ahead of the earnings tonight?
Does it work?
I am. I don't know if you can hear me or not, Mel. Listen, I like what's going on at the Gap. Their inventories were down 14% over year last quarter. I think they're doing a lot of things right. It's about margins with them. Their margins were way up last quarter. I think they're operating their business better. They haven't had nearly the move that a lot of these retailers have had. So, yeah, I like Gap going in earnings.
All right. Tom Zulo, your position on Gap.
Well, right now, I guess I don't like the retail sector. I don't believe there's strength there in the consumer. I agree with the guy is that Gap is doing some good stuff, but there's better risk-reward trades out there, especially for fast money traders.
All right, let's move on to the next trade here. Talk about the VIX, the volatility index trading higher by just about 8% right now. Could this be the beginning of a push back towards the key level of 32? Let's bring in Brian Stutland of Stutland Equities, otherwise known as the Fear Merchant, because the VIX is his specialty. Stutland, we're at 23 and a half or so on the VIX right now. Where do you see it going from here?
Well, certainly there's been this range in the VIX where you see it get down to about the $20 point level, and you get these little microbursts and little sell-offs in the market, 5 or 6%, and that causes the VIX to rise very sharply up to that 30 point level. So, certainly it seems like when you see the VIX get down to that 20 point level, it looks to be a time where you have to look to buy put protection in the market and start to own some of the volatility, because you get these little microbursts, and it kind of reminds me of the times in 1998, 99, when you had a huge rally in the market. But in between those rallies, you get these little microbursts where the market would try and shake you out a little bit, and you get these volatility moves. So certainly the VIX could move to the upper 20s. That's being indicated by some of the January and February futures trading significantly higher than where the VIX is right now, up around the 28 point level. So that's where I'm looking at.
Brian, always great to speak with you. Brian Stutland, who is also an Options Action contributor. Going to take a pause here on the Halftime Report on tonight's Fast Money. We've got all the after-hours action on Dell and the Gap covered, plus your best ways to trade the stocks the next day. Coming up next, a four-star fund manager with almost $50 billion in assets give you his best picks for this volatile market. Fast Money Halftime Report continues right after this.
Dude, you're getting in debt.